Hello everyone and happy Friday. Before we share my analysis from these last few days, please remember that neither I nor the SIMETRI team from Crypto Briefing are licensed financial advisors. What we provide is not a personalized investment advice. It is merely our opinions based on our various research and diligence. As always, do your own research before making any decisions about buying or selling crypto.
Okay, so let's get straight to the technical analysis for today. And it's obviously an important day for the Federal Reserve, and we can see the type of things that I'm expecting on the chart. So first of all, 19,600, if the Bitcoin was to move down that level, it should be pretty bearish. If it moves above the 21,700 level, that's the monthly pivot point to watch out for. If it moves above there, then I think, it's going to be pretty bullish for the market. If it gets above that monthly pivot point and holds above there, and we could start to probably see Bitcoin moving a lot higher. The weekly pivot point is 21,000. That's self-explanatory because it's where the market stopped and reversed from so far. So that's the natural pivot heading into the Fed meeting. And if we were to move past 21,700, I know we first got to get there, but if we were to move there, then the first target for me would be 22,500. But that's really the market pivot to watch out for me is 21,700. That's where I think a lot of sell orders or new buy orders are going to be added. And again, any daily price closes below 19,000, and that's a very negative sign for the market. Okay, let's get into the charts, and I'm going to just break down what I think is going on. So we've got the bigger picture here of what's been going on in the market for a while. We've got this consolidation that we just started to break out for, but at the same time, there's a head and shoulders pattern been developing, and we're getting to a critical point now where this pattern either gets invalidated or it starts to break lower. So let's have a look at that in more detail, what that might look like. So we've got the 200-day moving average is situated around 24,000. So there is a scenario where the market goes much higher today, breaks above 21,700 and heads towards the 200-day moving average and then starts to crash down lower. So that's one possible scenario. And we get that final right-hand shoulder and then we start to crash towards that target. That's definitely one scenario on the table. The other scenario for me, and the one that I've been looking at for a long time, is that we move up towards 21,700. There's no new buys there, and that completes the pattern, the final right-hand shoulder, and then we finally move down. We crash through the yearly lows, and we go lower. That's the higher probability. But again, I don't know what the Federal Reserve are going to say, but that's the kind of scenario that I've been looking at. And then there's the very bullish scenario where the market invalidates this head and shoulders pattern. It goes past the 200-day moving average. It goes above 25,000. Then it goes to 30,000. Then it starts to pull back again towards 25,000, and then it starts it towards 42,000. And then we'd really need to see something special happening in order for that to take place. And again, that's not my primary scenario, but I'm just laying out the three most probable scenarios that I think are likely to happen after the Federal Reserve. So overall, it's going to be the defining moment for me for Bitcoin heading into Christmas, especially with the midterm elections after today. Cannot discount really a strong rally from current levels if we see the 21,700 level broken and crucially a daily price close above there. It's all about the head and shoulders pattern. If that gets invalidated or we get a slightly higher right-hand shoulder from current levels, or we get a much higher and then a decline, 24,000 will be the target if we did start to see that second scenario that I laid out happening. And then, of course, the 200-day moving average becomes the first bullish target. Looking at Ethereum on the charts now, and we've moved up towards this triangle pattern that we broke out of, and we've moved back to test, and it's not really doing much. But note that Ethereum is pretty close to the 200-day moving average. It's only at 1,700, so that's something notable on the charts. And the daily parabolic SAR indicator is giving his first sell signal in around about a month. So I've got here a Fibonacci extension analysis. The Fibonacci, the 1.61 extension target comes in at around 1,757. So maybe we're going to break above the 200-day, test that, and then we're going to start to turn lower. So that's my high probability scenario, is that we see this final sequence and we don't just crash at the one sequence that is reached already. The other scenario is that we get a huge breakout today. We move back above the top of the triangle, we start to consolidate, and then we move towards these higher Fibonacci targets, 2002, 2003. I'm not favoring that scenario because of the macro conditions, but I'm just letting you know what's going to happen if we do move above maybe 1,757. If we start to hold above there comfortably, the first place to target is 1,900 and then much higher. So overall, Ethereum could be heading back towards the top of that triangle. For me, I think the most important thing is watching out for a big rejection or breakout around the 1700 to 1757 area. A return to 2000 could easily be on the cards in that scenario. And for me, it's a huge day for Ethereum, and closes or rejections around the 200-day moving average are going to be key today.
And thank you. I hope you found my thoughts helpful. If you'd like more, please click the subscribe button for Pro BTC Trader and join me every week on Wednesdays for our live trading war room and daily email updates.